Good day, everyone. In this presentation, I'll be explaining briefly about MFRS 8 operating segment and the concept of the Chief Operating Decision Maker, or CODM. MFRS 8 requires companies to provide information about their different operating segments. The main purpose is to help users of financial statements understand the nature and financial performance of each part of the business. This standard follows the management approach, which means that the segment information presented to the public is the same information used by management internally to make decisions. The CODM is not a specific title, but rather of the person or group responsible for making key decisions about allocating resources and assessing performance across the company's business segments. In some companies, this could be the Chief Executive Officer, the Board of Directors, or even the Executive Committee, depending on who actually makes those operational decisions. Now, let's move on to the examples of Chief Operating Decision Maker, or CODM. In Maybank Berhad, this role is performed by the Group Executive Committee led by the Group President and CEO, who reviews the performance across key business segments such as global banking, community financial services, and insurance and takaful. In Petronas Gas Berhad, the Managing Director and CEO act as the CODM. The chart shows the reporting flow from the Board of Directors down to the Managing Director and CEO, and then the leadership team, which oversees divisions like Finance, HR, Gas Processing, and Business Excellence.
There are two types of segmental report, which are reportable operating segments and entity-wide disclosure. Reportable operating segment is a primary segmental report that meets the quantitative thresholds of a 10% of revenue, profit or loss, or asset, and it provides descriptive information for each of the entity's reportable segment. For example, these operating segments review for the quarter 2023 versus 2022 of Bursa Malaysia Security Berhad provides detailed information regarding the entity's reportable segment, which is their security market, derivative market, Islamic market, and many more. Next is entity-wide disclosure. Entity-wide disclosure is a type of segmental report that provides information about the entity's overall operation. This type of segmental report usually divided by products and services, geographical areas, and major customer. For example of products and services, a segmented analysis in this Genting Malaysia Berhad segmental report, where the segmented analysis is by services such as leisure and hospitality, properties, and investment. The same goes for geographical areas. Genting Malaysia Berhad's service of leisure and hospitality extend far and wide to Malaysia, UK and Egypt, and UK with Bahamas. Next is major customers, which can be represented by Synergy House Berhad segmental report, where they divide their entity-wide disclosure by major customer, which is customer A, B, and C.
MFRSA is about operating segments. It requires a company to disclose information about different business segments. This helps users understand the performance, risk, and nature of each business activity. Segments are identified based on internal report used by the Chief Operating Decision Maker. This is Maybank segments reporting under MFRSA. As we can see, Maybank divides its operation into several key business segments such as community financial services, corporate and global market, investment banking, asset management, and insurance and takaful. Each segment reports its own operating income and financial performance. This allows stakeholders to see which business segments contributes the most to Maybank overall performance. MFRS 134 is about interim financial reporting. These standards require companies to provide financial information between annual reporting periods, typically on a quarterly basis. The purpose is to provide timely and reliable updates to users so they can assess the company's financial performance and condition throughout the year. An interim report must include condensed financial statements and explanatory notes that highlight significant events during the period. This enhances transparency and supports better decision-making by investors and creditors.
Significant event and transaction that affects on financial position and performance. There are two significant event and transaction that affects on financial position and performance, which are joint venture and major impairment loss. When an entity had a joint venture, their financial position can be impacted, such as by the non-current asset, where the cash is reduced and the new non-current asset is created. The individual asset and liability of the joint venture cannot be combined line to line with the investor's financial statement, and the capital injection has no initial effect on the retained earning. It can also affect the financial performance, where all of the revenue and expenses made from these joint ventures are not included in the investor's income statement. For example, we can look at Axiata Group Berhad Consolidated Statement of Comprehensive Income, where from the joint venture they made an expense or loss of 1,768 ringgit on the fourth quarter and 9,709 ringgit for the year end 2022. Next is major impairment loss. Major impairment loss have a great impact on the financial statement, especially decrease in assets where there's a substantial write-down on the carrying amount of an asset that leads to reducing the entity's total asset base and equity. The same goes for financial performance, where the impairment loss is recognized immediately as an expense, plus with increase in net loss. For example, Further Global Ventures Plantation's second quarter report on 2023, where they record a major impairment loss of plantation assets in Indonesia by 47 million.
For this question, I've used Top Gloves Corporation Berhad third quarter report as an example. As shown in this table, the current interim period covers the quarter ended 31st May 2024, while the comparative period is the same quarter from the previous year ended 31st May 2023. Each statement provides information for the same 3-month duration from 1st March to 31st May, allowing users to compare performance and financial positions between periods.